And you know what that sound means? That means it is time for the Tackle Trading Halftime Report. And this day, Mark and I came together to overthrow the oligarchs of Matt and Tim and take over and really have a good time with you guys. Mark, how you doing today?
Well, good. I always say that I am smarter than my two brothers combined. So having one of me certainly equals two of them. So that's my.
I can't argue with that one.
Oh, drinking my many liquids. It seems like all I do is have a liquid diet. Red wine, coffee, and Propel water. So,
is that the sponsor?
I don't know. I mean, coffee from Mavericks. I've been going on a big coffee. I've never been a big coffee drinker, but I mean, it's been so freaking cold, and I'm so tired of this winter. Anything that resembles warmth right now here in Utah is something that I certainly can get behind. So
absolutely. I'm just thinking about, I just made that joke the day after President's Day that we overthrew leadership. We'll see how that one goes. Well, let's go ahead and jump right into it. Go ahead and pull up your screen. We'll start working our way through the market.
Yes, and we also get rid of those liberal justices and get between Cody and I. Cody and I had a nice conversation about that we will not share because we don't like to offend it. I mean, you talk politics these days, and my goodness gracious, it just seems like everybody gets tied. But it was nice to have two conservatives chatting without that liberal injection of our two brothers.
I'm joking.
We got a lot to talk about in the markets. You know, one of these days we'll do a political podcast, and then we can have fun with that. So, but let's talk the markets because lots going on. So here, let me pull up my screen. I want to start actually talking about gold. All right.
We have to talk about gold.
I mean, gold having a nice breakout, a nice run this morning. Now, for anybody, I'm feeling particularly froggy because in 2019, I have been sometimes you're on top of it and you have a great feel for the market. Other times you don't. As a trader, as you go throughout the years and the decades, you'll know times where you're on fire, where you're hot. And 2019 for me has been it seems like everything I say plays out exactly how I think it will. I've been on a heater. I should be at the craps table right now in Vegas. Forget this trading. I want to go play. If I, play craps, have that hour-long roll on a craps table. Oh, which is funny. I got to mention, I was once, my brother, and this was Tim. Tim was just 21, maybe 22 years old at the time, and we were down in Mesquite, Nevada, and it was like 3 a.m, and I come stumbling in to the craps table, and Tim's rolling craps at 2 or 3 a.m. Back when we had less responsibilities in time. But, I'm like, how you doing? And he's like, oh, I've been rolling for a while. And I look at the craps dealer and I ask him, I was like, how long has he been rolling? And he's like, 55 minutes.
Oh, my God.
And I look, and Tim was betting $5 at a time. So he was up like $200. Now, if I'm ever at a craps table and a roll goes 55 minutes, you'll never hear me at tackle trading ever again because I'll have made like $3.6 million. But he was betting $5 at a time and just had been rolling for 55 minutes. And I was just like, oh, Tim, you young soul.
That's a trader in him. He doesn't want to bet too much. Was he just betting the line too?
He was betting the line. He wasn't betting the numbers. He was placing $5 on the line. Occasionally he would bet $10, and he was up, several $100s. I've never had a 55-minute roll in my life. I seriously would retire. I'm a very aggressive craps player. All right. But for getting to the markets now. For gold, if you have been a pro member of Tackle Trading, whether it is on the lounge, whether it is on a coach's show, whether it has been on Cash Flow Club, you've heard the
halftime report here.
Halftime report here. Like, I know I personally have been pounding the gold pulpit, and any of you members of Tackle Trading Pro members know that this is 100% true. Been pounding for 6 weeks now. And probably longer. I'm just trying to be conservative on the amount of time. And every time I give my gold speech, I talk about the fundamentals behind gold, the backdrop, the stability of the fundamentals behind gold over the last 6 weeks have been absolutely insane. Now, I could spend the whole show on the whole halftime report on it tonight, but if you have been and followed that analysis, which I've went through, which other tackle trading coaches have went through, you have made money in gold. It has been an absolutely insane fundamental backdrop to gold. You're finally seeing a nice breakout. Doesn't give you a great entry point right now, this very moment, because these type of days, when they occur, this is a huge, gigantic jump for gold today. But the fundamentals continue to be strong. It is one of the safest areas in the market out of all markets right now. While not oftentimes a great directional play, i.e. buying a call, buying a put, betting on the direction. For cash flow traders, for long-term investors in gold, the fundamental backdrop has been insane. Cody, how many times over in 2019, and even at the end of 2018, have we just been pounding the pulpit on gold?
Yep. Just keep an eye. If it breaks here, it's going to move. Watch it here. If it breaks here, it's going to move. And you can see each of those levels. You have them marked right there on the chart that every time it broke that level, it would have a little retracement and it would run. It would just, it's so easy to see. And this is a textbook pattern just to watch and play as it happens.
No, Cody is talking about those horizontal short-term resistance levels that form, which is a very common technical levels that form on stocks, ETFs, the market itself, commodities. But it's just a fundamental backdrop. The technicals have been nice, but the fundamentals on gold have been insane. And so it is not surprising at all that you see this gigantic run over the last couple sessions, because eventually that was going to happen. Eventually that's going to happen. And you certainly see that carry over into a lot of the different gold trading instruments. The ETFs up.
GLD, even your gold miners.
Your gold miners up. Even your individual stock companies up. Backdrop. Back on January 15th, 16th, somewhere in that range, I did a cash flow club on Newmont Mining. Spent about 25 minutes on Newmont Mining, talking about how it was a great cash flow moment using a combination of technical analysis and fundamental analysis on the backdrop of gold. It's been an insane environment for gold, the fundamentals. Absolutely, to re-enter gold, once again, top entry point at the exact moment. Whenever you have these big, huge run-ups, sometimes in the following days, you see continuation, sometimes you see a little bit of sell-off. So the exact precision of your entry right now can be a little tricky. But I certainly know, for me personally, if gold pulls back at all again, providing another entry opportunity, I'm all about it. Because one of the things that we've been excited about on the fundamentals of gold is that we don't see it changing anytime soon.
Absolutely not.
Cody, what's one of the hardest things as a trader? Is how hard it is as a trader to find something that you feel very confident 2, 3, 4, 5 months down the line?
You don't. Our opinions change back and forth constantly, but the fundamentals behind gold don't change. It's the same it's been for centuries, not just years, centuries, decades, just throughout time. Gold.
No, and so like when I'm trying to forecast an individual stock, let's say a Walmart, let's say a Boeing, let's say a McDonald's, it's really hard 6 months out to say, yeah, I feel very confident 6 months out. As a trader, it's difficult as a short-term trader to do that. With gold, I mean, we've been bullish not only on short-term price movement, but 6 months out, 12 months out, our analysis is really, really, really confident. So, all right, let's get to the markets itself. So, any
bring up the SPY.
All right, general markets itself. This is where things can get a little trickier. All right, so we have had an amazing run up in equities in 2019. Now, one of my favorite short-term indicators, the 9 EMA, and for pro members of Tackle Trading, I did talk about a little bit, you read the options report I wrote this weekend, Cody.
Oh, that was a good option report. Bravo to you. I'll pat you on the back a little bit.
Well, it's funny. Whenever you start writing something, you don't know where it's going to go. But I was really curious because of this gigantic run up. I went back and looked at the last 10 years. The last 10 years of rallies we've had in the market. Using my preferred technique of gauging short-term momentum. And it was really, really fascinating. It was really, really fascinating. If you're not a pro member, email me at Team@Tackle Trading. I'll set you up on a short-term pro membership. If you are a pro member of Tackle Trading, look at the run-ups we've had. It's something that I'm going to do a lot more writing on because I only scratched the surface. Couple big takeaways. Short-term runs like you've had are not entirely uncommon. On average, you have about 2 of these a year. So it's so easy for traders to get caught in the mindset that it can't go any higher. I mean, tonight on the Coaches Show, we're going to talk about some of the psychological elements of trading at 8:30 Eastern on our weekly.
Who's going to be on that show tonight?
It's going to be myself and Grant Larson.
Oh, that should be a very nice show then.
And we're going to talk about some of the psychological problems traders encounter.
So right now the S&P is running up to that 2,800 mark, kind of having a slow day in the market. What are your thoughts as to what this means right now?
All right. First, I want to ask you a question, Cody. Have you ever caught yourself as a market is trending saying, I don't think the market can go any higher? It's went up too much already, and you start to get hesitant during run-ups.
I don't think I say it can't go up any higher. I've learned my lesson on that one. I start getting a feeling of overextension, or if something starts looking parabolic, then I start getting nervous. But I never say it can't go up any higher, just like I never say it can't go any lower.
But you said you've learned your lesson, which means at some point.
At some point I have. I have. Oh, absolutely. We've all had those times where it's like, I mean, look how high it is right now. It's almost, it's gone up 10% in a month. Like, that's a big run. It's got to have a pullback. It can't go in, people who keep buying GE right now, like, oh, it's down, it can't go any lower. It's like, yes, it can. Like, the market can go up higher, GE can go lower, and the traders who've been in the market a while will tell you this and they'll explain it. But I think this is a lesson that you have to learn from Hard Knocks. If someone could tell you day in and day out that it can and it will, and until you learn that lesson through Hard Knocks, it's the only way to learn. If you are listening and you will take that advice, know that things can go higher and things can go lower.
There's an evolution we have as traders. And I think it's very natural because a lot of times you know, and I don't say this, I mean, with my own kids, I know I'm telling them things that I know that they will ignore and that they have to learn those lessons. And then once they learn those lessons from themselves, what I or you know have said as a parent gets reinforced. Dad was right. I should, yes. And then they put the two and two together.
Just sit over there with a smirk on your face, like, yeah, I told you not.
I mean, that's just what it is. But you know, people have to, through their own process, through their own experiences, really have that lesson reinforced for them to truly change behavior or have those principles reinforced, and so that they change their own behavior in the future. There is so many parallels to being a parent, to being a coach in the market. So many times we say things based on our experience, based on our understanding, based on our teachings. But it's not till a trader really learns those lessons from themselves that they adapt and change their own personal behavior. I mean, traders have, since day one, when I started teaching, I have had to fight, but it can't go any higher. It's already had too good a run up.
But it can.
But it can. But it can. And so it is one of the reasons we stick so closely to technical analysis. And
2015 was an excellent example of that. Everyone was like, it's not going any higher, it's not going any higher. And now, I mean, we were topping out above 2,200. Now we're pushing back up at 2,800.
I mean, you will see gigantic runs. Now, you know, part of the analysis that I went through is that, I mean, this is from 2016. Gigantic run up, followed by a couple weeks of sideways action, followed by another gigantic run up. Every market is a little bit different. But one thing that when I was looking at these rallies that I learned is that it is really, really, really amazing how many of these short-term bursts have occurred over the last 10 years. Very easy markets providing a ton of short-term profitable opportunities. And oftentimes, depending on the situation, one gigantic run after a few weeks off, few months off, leads to another gigantic run. We all have our opinions, we all have our fears, we all have our psychological impediments when it comes to trading. This is why technical analysis, the ability to read a chart, come up with trading plans that save us from ourselves are so critical, and why we emphasize them so much at Tackle Trading. Now,
absolutely.
What kind of trader are you? How do you self-identify as a trader, Cody?
How do
Well, it's true. I mean, I
know. I just laugh at that. So I actually, I try to stay well-rounded. So I love my options strategies. I love my credit spreads. That's probably my main bread and butter. Is I like them because I can play something both directionally and with some data behind it. That way, if something decides just to take its time moving in the direction I believe it will based on technicals, then while it's taking its time, I'm picking up a little bit of theta. But I also dabble in, you know, the directional trades or day trading Forex market. So I would say it's hard to really say, because I don't say I'm all a theta-based trader, and I'm also not just a delta-based trader. I'm a little bit of both.
All right, let's say somebody is new and you just use terms like theta and delta, and they're like, I have no idea what those are. You know,
then I would say, I guess in that case,
what those two concepts, because we use those terms a lot as coaches.
We do.
But what does it mean to be a theta trader in your view?
So I would say the three main Greeks that we use, and that's what those are: theta, delta, vega. When you hear those terms, delta means that we're referring to direction. So if I'm a delta-based trader, that means I am looking for a directional play on a particular stock or on the market itself. So
and what does it mean, directional?
Directional is the buy low, sell high. I'm buying at X price, selling at a higher price, or, you know, buy high, sell higher, sell high, buy low. It's just I want the price itself on the ticker symbol to move in the direction that makes me profitable. So that would be.
And so how do we, like, for example, what are some of the most popular entry signals for delta or directional traders, however you want to?
I would say the most popular entry signal, which is the rule that we teach our students, is a half ATR above the previous high in a bullish retracement or a bearish retracement, and it would be the opposite, would be the low. So that 1/2 ATR above the high would be your entry signal for confirmation. So confirmation meaning that you see the pattern and you're getting that confirmatory signal that triggers you into a trade.
All right. So what Cody's referring to there is that whenever you have a trending market, and what do you guys do on the halftime? You told me before the show, Cody, that Tuesdays you do, what do you call it?
Delta Tuesdays.
Delta Tuesdays. So yep. I guess Tuesdays on the halftime report are Delta Tuesdays, where you talk about directional trading. Yes. And what Cody was talking about is because for directional traders, where you're betting on a direction of the market, you're not just haphazardly placing that bet. You're not my brother Tim saying, I'm just going to bet the money line. I'm going to put my $5 bet on the line and, you know, see what happens. There is a logic. There is a precision is probably the best word to describe it. You're not haphazardly just buying a call option or buying the stock, hoping that the stock or ETF or commodity or whatever else it is you're placing that bet on goes up or goes down. You're not haphazardly doing that. Delta traders, or directional traders, if you will, find precision opportunities to enter into their trade. So one very popular pattern that Cody was referring to is that when you have a trending market or a trending stock, there are time periods where you have a retracement or where the price pulls back. And so here we see an example a few weeks ago on the SPY, a popular ETF that is used to mirror the S&P 500, where price pulled back for a few sessions. And then the technique, the precision technique Cody was referring to, is to enter into that trade above the high. And then you said what percentage ATR?
1/2, 0.5. So 0.5 ATR, whatever that is. So based on the actual move itself, on the SPY, it looks like the ATR is 20.4 right now. No, right. That's not right. That's on a chart.
So 1/2 of an ATR. Okay, so if you don't know what ATR is the average trading range.
Average true range.
Or true range. Trading range I like better. You know, true range is more technical. Trading range, so often in trading, we get caught up on vernacular where new students don't understand what you're talking about. And so I've always thought average trading range was easier to understand.
It does make more sense.
So what you have for every stock trading is an average of how much that stock moves on average. Now, a lot of software, in fact, I can't think of a single software that doesn't have it, has the ability to figure out what that average trading range was. And so what Cody was saying.
Right now it's 2.7 on the S&P.
But on the day of this retracement, it was about 3.6, it looks like. So half of that would have been, what, $1.80?
Yep.
So Cody's technique would be to go up $1.80 after the retracement. And what this does is it gives you a little bit of a word we call confirmation. Now, we've explained confirmation, Cody?
Yes. Yeah, we've explained confirmation a couple times, but confirmation is just what it sounds like. It is the confirming signal to the pattern that you see.
And what it does is it helps. Confirmation is huge. It keeps you in trades that you might have otherwise gotten out of because you were fearful. It keeps you from getting into trades
that haven't,
without having positive momentum on your side. And so according to Cody's technique, you have a little pullback. His confirmation level, 270, 238, which would have been about half of its average trading movement. And 2 days later, Cody on that technique would have been triggered into a short-term trade. And so here he would be entering the trade management of a winning trade. Entering the trade management of a winning trade. So that would have how he would have entered that situation, would currently be in a profitable situation. Now, okay, so let's say our trading plan. I oftentimes say when I'm coaching at tackle trading that we want rules to govern our actions. Now, our actions, when we enter a trade, when we exit a trade, and trade management techniques we might do in between those key decision points should all be governed by rules. You don't ever want to be, you are at your best. You are at your best when you can think about, theorize about, contemplate your rules of trading.
No,
go ahead.
I want to add something on that real quick, because when you have the rules and you follow the rules that are set, that's when trading is simple and stress-free. If you're stressing about the market, you're breaking some rules somewhere. You're either entering too soon, over positioning size, you're counter trend trading, you're not following. If you're following the rules, you should not have any stress or worry about the market. You should simply just see what it's doing, work your way down, top-down analysis, and make your trades. So I just wanted to add that in there because the rules, I mean, rules can be pesky, rules can be annoying. You can be like, but if I get in here, then I'll make an extra, 10 cents per share on this trade. It's like that 10 cents, though, can get you into a trade earlier than you need to. It never confirms, and then you end up more losing trades than winning trades. Take your time, don't stress, don't jump the gun, follow the rules, and you will have a stress-free trading life.
And I know it. Part of the reason I emphasize rules so much when it comes to trading, and this applies to not just directional trading or Delta Tuesday that we're having here on the halftime show today. This, no matter what type of trade I place, I have a different set of rules for each strategy. And one of the reasons I emphasize those so much is because I am a terrible trader when you leave me to my emotions. When you leave me to simply base my decisions on what do I think? What do I feel? What do I think is going to happen? What should happen? I'm terrible. I got too much fear and too much gamble in me all at the same time. And so I go back.
That's why Tim was just betting his $5 on the line. His trading.
No, that is so perfect because that's what it is. I want to gamble, but I also have that fear. Why didn't Tim step up? Why didn't Tim step up his bets on the craps table that night or that morning, I should say? Is because he didn't have any experience to know what was occurring. He was too fearful because I might lose this next one.
Yep.
But he still wanted to gamble, so he kept throwing money out there. Guess what? That runs through Justice DNA because I have that when I'm trading without rules. I'm literally terrible. I should not be trusted with any amount of money when I'm not adhering to rules. But when I'm at my best is when I have time to analyze my rules. Now, of course, this has occurred over many years. When I have time to think about and adjust my rules when the market is closed, when I have time to evaluate trade setups and then apply my rules saying, this is exactly what I'm going to do on this trade. All I have to do then is follow the rules. Say, hey, this is what I've decided. No matter what happens, I'm adhering to my set of rules. That's when I'm at my best. And I think most people are like that. I mean, it's probably a rare soul, don't you think, Cody, that is at their best on the fly in trading?
Oh, yeah, definitely rare soul. And this goes back to the question of what was it? Would you rather give all your money to a trader who follows particular rules, and that includes position sizing, targeting, and does everything correctly, or the best technician there is who does everything on the fly? Who would you rather put your money with?
Yeah, that's a rhetorical question.
Yeah, it really is. And the justices, if they gone over in podcasts, they always say it because it's so true, is that following the rules. And I mean, we talk about all these different things, and of course nowadays with computers and algorithms and things, minus the speed, the reason the algorithms work is because they're just that. They have a code, which the code is the rules. They follow that. They cannot break it because they are computers. There is no emotion to the algorithms. They simply just do what they're programmed to do over and over and over, and they win over time. We're going to have winning trades. We're going to have losing trades. But if we have more winning trades than losing trades at a higher return to risk ratio, then we're going to be successful traders. And those are all set in the rules that we start before we start trading.
No, it's so true. And I really would like everybody that I teach. I mean, and I take my role as a teacher with a sacred responsibility that I need to do the best job I can in communicating the knowledge I have to students. And I really would like every student to become as mechanical as a computer.
Absolutely. All right, now I'm going to pick up where Tim does. We're at the halftime point of the halftime show.
So you mean you have rules to production of the halftime report?
We do have rules to production. That we do. Guys, I know that you may not like your new leaders here, but if you could, let's outperform the normal likes and shares we get from the normal Justice Brothers. Let's get that thing up there.
If we outperform the normal likes and shares, I mean, I would have gloating material over Matt and Tim for several days.
Same here, guys. Let's get those likes up.
Yeah. So if anything else, just to kind of elbow and nudge in a fun way, Matt and Tim, it would be fun.
Absolutely. Well, let's continue working our way through the market. Go ahead and pull up Dow Jones for me.
Now, I always, and one of the reasons I do this is I know Matt and Tim are prone to look at futures, but I like pulling up the ETFs that mirror the larger index because those are the more applicable trading instrument. I know traders, and most people don't go trade futures as far as percentage-wise, but they will go to these ETFs that mirror the futures. So while Matt and Tim will pull up the futures chart, that is why I pull up the ETF that mirrors that. All right, so here we're looking at the Dow Jones. What do we got going on? What level are we approaching on broad markets in general, Cody?
I'm sorry, I was typing in the chat. I did not hear what you said.
I said, what technical level are we approaching on the broad markets right now?
Broad markets, we're approaching that level that was holding back in March and after we had that crazy February.
No, and well, in levels that hold, we call that resistance.
Yes.
When it's going to the upside, and you see this on the broad markets as a whole, that a resistance level was formed late 2018.
To 26,000 on the Dow Jones.
And we're approaching that. And a lot of people in their trading plans when things approach a resistance level, this is where profit taking occurs, because resistance is resistance for a reason. There's a reason it is at the core and a central principle of technical analysis, is that when things approach resistance, there's no guarantees what the future holds. But we do know historically that sometimes stocks will take a breather. Sometimes markets will take a breather. Sometimes markets will sell off.
Some traders will start taking profit
when things approach a resistance level.
Absolutely.
And we certainly have that, approaching that resistance level on the market right now.
So what do you see as a difference between the S&P and the Dow Jones? Anything stand out to you different on those, or are they just?
No, markets as a whole have been driven. I mean, you can see it in the patterns. You see it as they're both approaching resistance level. The broad markets as a whole in 2019 have been moving together.
Yes.
Sometimes you will see some divergence between different markets, but as a whole, they have been moving together. They have been moving together. The same general catalyst, a accommodative Federal Reserve, renewed hope that you're near the end of the trade war with China. Generally, while not robust and dynamite earnings, good enough earnings, certainly not to cause fear, which is a whole different conversation. Oh my goodness.
That is, I do want to talk about Walmart earnings before we get done. So let's keep moving our way down, because they talk about dynamite earnings. That Walmart had some good earnings. It's working our way. Yep, right there. Look at that gap up.
So Walmart, a component of the Tackle 25, which is a cash flow based list of companies that we like from a fundamental perspective, that we evaluate from a technical and fundamental perspective each quarter. Walmart is just one of those companies. I don't like to really directionally trade it, but it is certainly on my list of preferred companies to enter into for cash flow opportunities.
Yes.
When there's buying signals to do so.
And in their forward guidance, so they had bigger than expected sales on this jump, but then also in their forward guidance, they're putting a lot of their focus into the online retail space versus just, being an old brick and mortar. And one of the ways they're doing that, they're trying to compete with Amazon on this, and they're not doing half bad of a job. They have the free shipping when you order online. They have the curbside pickup. They're making it easier and more convenient to compete in that space.
One of the criteria that I use in evaluating, and so right now we're stepping out of directional. You got to know what hat you're wearing, or what hat the coach is wearing when they talk about a individual company. So right now I'm talking about cash flow, long-term investing type aspects.
Fundamentals, yep.
Yeah, and one of the qualitative things I look for in a company is management of the company. Yes. Walmart just seems to have a good feel for where retail is going. And most of these comments are behind the scenes. I have very disparaging things to say about the retail sector as a whole. In fact, on a Trading Justice podcast a few weeks ago, I played a little game with Matt and Tim and on retail stocks, but I wouldn't let them choose Walmart. Like I said, if you had to hold one retail stock from now to the end of time, what would it be? But I didn't give them the choice of Walmart, because Walmart has a great grasp of the future of retail, which is going to struggle brick and mortar. Make no mistake. It already has. You think about retail and how much so many chains have struggled and filed bankruptcy during the longest economic expansion that in history.
Perfect example of that is actually Toys R Us. Toys R Us, when the online space started taking over, they sold the rights of selling their products, Toys R Us, to Amazon. Rather than them creating their own online space, they thought they would hold down the brick and mortar, and they said, Amazon, you sell our products online. That was one of the dumbest decisions Toys R Us ever did. And
no, I mean, that's a great example. When you talk about the necessity of brick and mortar having a strong brand online presence, and that is like a textbook example, Cody.
yes,
Like a textbook example. I mean, a great example. Well done on that. I mean, everyone out there think like when you're talking about long-term investing, when you're talking about long-term cash flow strategies, I mean, just think about this when you're looking at retail stocks, brick and mortar store stocks. In a couple months, we will set the record, barring some unforeseen abysmal data, that we will enter the longest economic expansion in the history of the United States. All right? Now, a whole different conversation can ensue about, well, how much longer can that last, blah, blah, blah. It can last, just like a trend can last. But my point here is, if so many brick and mortar stores have struggled and went out of business during the longest economic expansion in history, what's going to happen when the inevitable one-day recession occurs?
one day.
I mean, you've just had a changing landscape in retail. And so companies like Toys R Us that are not adept or focus on the online aspect of their business, because Toys R Us had a great brand name.
Absolutely, they did.
You know, great brand name, been around forever, recognizable brand name, but they didn't focus on the online aspects. But as you said, what was it again? Reiterate what Walmart, their forward guidance?
Yeah, their forward guidance, they were saying they want to focus more on the online sector, and that's not just selling directly shipments, but also like the curbside pickup. They're trying to make the online idea of Walmart one of the main things you think of. You think, hey, I'm going to run to Walmart rather than directly going getting your cart. They want to get consumers thinking, hey, let me order the stuff online and I'll just run there and they'll hand it to me and I'll walk out.
And this isn't the first time they've emphasized. I mean, their focus on online has been going on for years now. But when I analyze Walmart and I continue to hear that type of forward thinking, recognizing that, hey, Walmart brick and mortar is about as strong as you get in brick and mortar, but they're not content there. They recognize the demographic trends, the change in consumership, and they are continuing to focus on it. And I mean, do you like Walmart's chances, Cody, of succeeding with that long-term vision?
All right, we'll talk about rhetorical questions.
I mean, yeah, and so like
absolutely.
This is like when we sit down and analyze companies and put them on our Tackle 25, when we talk about them in our cash flow club, I mean, this is the type of overall, some of the criteria we conclude and consensus develops among us on why we like Walmart. Any given day, any given week, any given month, price action can and will be determined by technical analysis. But long-term drivers, long-term investing, Walmart not only has stability through their brick and mortar, but you can see, I mean, if they succeed, if they continue to grow their online presence, well, we all know what happens with online companies that show tremendous growth.
Yep. Now, Mark, looking at Walmart right now, as a trader, do you see a trade right now, or what are your thoughts on Walmart after this earnings release?
So whenever I analyze anything from a trading point of view, because everything we just talked about Walmart was from a long-term investing point of view. When I analyze things from a trade, one of the first things I do is I back out in time and I look at weekly candlesticks. Now, one of the reasons I do that is because the chart, when you look at daily candlesticks, it can get kind of cloudy, be a little bit harder to see. When I look at weekly candlesticks, things become a little clearer. So it's the first thing I do when analyzing a chart that I haven't looked at from a directional standpoint for a while. First thing that pops up is a really significant resistance level. All right, so we essentially formed a double top over the last couple of years on Walmart. After that nice run where the market as a whole was going crazy in 2017, during the higher time, well, it can't go any higher. It can't, of course it can go higher.
Of course it can.
Because trends are strong. You established a short-term resistance level that was tested again last November. So you have from a technical analysis standpoint, a double top situation spread out over time. So where's price right now?
Right now we're sitting at 103.69.
And so that resistance level is at about
106, some change. Yep.
Nice.
And I'm
so
seeing, with that double top, I'm seeing a nice cup and handle pattern forming on the weekly. That's really clear to see right there.
It is. So a cup and handle pattern, if you're unfamiliar with that, is a very strong, lovely pattern that doesn't form all the time.
No.
It's not a pattern that forms every day, but what you have is you have some sort of handle. Now, ideally, I would like that handle to be a little higher. Oftentimes, a textbook cup and handle is where the handle itself will be a horizontal. Let's say it stayed up there several weeks, and then you had the cup form. And I don't have the drawing capability. I'll do my best to draw this
with the lines.
with the grid lines. But then you have the cup. So there's the handle. Now, ideally, it's up here near the top. But this is what Cody is seeing when he says that. And then you have the cup form. Now, this is a very bullish bird.
I was seeing the larger one. I'm seeing the large cup between, let's see. I'm seeing, let me look on my chart here, back on a weekly. Starting last January, I'm seeing that big cup to last November. And then the handle being what's happening right now with this part upward. If I see a break above 106, that is a bullish entry breakout signal.
Yeah, and regardless, you do not have to recognize, like if you're in the beginning stages of charting, you don't have to recognize the cup aspect. It's much easier to recognize the double top where it hit resistance there again.
Yep.
Long story short, right now, we respect resistance. There's not a whole lot of ability to make short-term money before it gets up to resistance. But if you have a breakout of that resistance level, well, things could get really, really interesting.
I definitely like this, and I would keep this on a watch list. Everyone should have this on a watch list right now.
When times where Walmart has formed resistance levels, oftentimes those resistance levels last for an extended period of time. I mean, here we're looking at one of the more recent resistance levels that formed around $70, where, I mean, you're looking at 10 months of price action where that resistance level formed, traded sideways, and then when you had a breakout of that, it was a pretty decent entry point once you broke out of that resistance level. Now, market action over the last year plus, there's been pockets of extreme volatility. Last February, March, most recently at the end of 2018, creating what appears to be a lot of extreme patterns. But if you step back and look at the big picture of it, really all Walmart has done is trade sideways. It's not a whole lot different than 2016. The only difference is the magnitude of some of the sell-offs, which have been directly correlated with the market itself. When the market sold off on extreme levels, well, it was hard to find stocks that were immune from that. So the general pattern shows some volatility on the sell-offs, but the end result has been a stock that's traded sideways. The only difference is the range has been a little bit bigger than normal. You certainly saw stability, nice floor form at just north of $80. You're now trading at the upper end of the range, which makes from a short-term trading point, whenever this, whether you're looking at Walmart or anything else, you have a prolonged period of sideways movement. And so if you have breakouts of that, it could provide a very, very nice trading opportunity.
There's two delta strategies. Let's move on to the dollar if we could. Want to make sure we make it through the market. So we're running down, usually do DXY.
All right, one of the reasons gold is having such a sell-off is because, okay, here it is again. This is why you respect resistance. This is why you respect resistance. The dollar, after a very nice run, what was it approaching?
Approaching resistance right there at 97.5.
Let me find a nice. So here we have resistance on the dollar. As stocks, as trading instruments approach resistance, this is really, really, really common. So here we had a triple top type situation where over three different weekly time periods, resistance was created. The run up to the dollar, approaching resistance. Resistance is resistance for a reason. So previously, I think a couple times in this report, this halftime report, I've said traders will oftentimes take profits. Yep. They certainly will not enter in to trades while it's approaching resistance, because this is what happens all the time. Does this mean that the dollar is going to go down and it provides a great bearish opportunity? Not necessarily, but it certainly is not an ideal time to enter into bullish directional trades when things are approaching resistance. So whether it's the dollar or Walmart.
Hey, Mark.
Hey.
I decided to crash your party a little bit.
No, you were overthrown. Go away.
No way. I saw you guys talking about the dollar and had to get a quick take in here. I had to jump in. Mark, you made a good point. This is not a shorting opportunity for the dollar. Just because gold's breaking out and the dollar's retracing does not mean that, because what you're seeing here is you're seeing a short-term bullish retracement that will approach that next level of resistance in the future. And if you want to learn that technical pattern and see the historical performance of that technical pattern, all you have to do is look at copper today. Go ahead and pull up /HG.
Oh yeah, copper's.
Okay. Now, what I want you to look at is over the last 6 months, Mark. Okay. So as you can see, you have this short-term intermediate trend of consolidation, right? And then you have copper in the last month and a half. It is running into that resistance level. And what happens is you get overextended coming into the resistance level, and then it retraces back down, forming that bullish retracement. And then it makes that next run at that resistance, a full head of steam behind it, and you break out of that and you're starting to run. I love that signal on copper. Coming back to the dollar here on DXY, you have a similar type technical formation on the dollar. You have an intermediate short-term, an intermediate neutral trend. You have a short-term bullish uptrend. You're now approaching that very important resistance between 97.5 and 97.70. You simply slow down. I mean, my goodness, guys, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 out of 10 days up on the dollar. It's running out of steam, and it's going to form that retracement. Look for it to, and it's literally hitting support just right now today. Wait for that to turn around, and then it starts approaching that 97.5 level. So not a shorting opportunity, more of a patient wait for the dollar to pivot and give us a nice buying opportunity on the dollar. And by the way, I've come around a little bit. Gold can move up with the dollar moving up, in my opinion, in this cycle. That's how weak the euro is, in my opinion.
Absolutely.
How many times over the last 2 months have you said comments that were bullish on gold, Matt?
I wrote the commodity report on October 27th saying gold has reversed. It's a safe haven. It's time to buy. And ever since that moment, we've seen nothing but bullish, bullish, bullish. It is my favorite tradable instrument right now. I love the breakout on gold. And quite frankly, with what the Fed is doing and with what other central banks from around the world are doing, gold is probably my number one safe haven right now.
I mean, we started the show talking about gold for 10 minutes, Matt. And it's just, I mean, we do not bat 100% at tackle trading, do we?
No, nobody does.
Have we been spot on gold for 3 months now?
We haven't missed a beat on gold. Every report, every analysis, we've been spot on gold.
I mean, I have went out of my way. If you heard me do live shows in 2018, I didn't talk about gold very much until December. And you can't get me to shut up about gold over the last couple months.
I mean, I've been asked the question many times over the last 3 months, Mark, gold or silver, and it's not close. It's not a debate. It's gold, it's gold, it's gold, it's gold, it's gold, and it takes me less than a second to answer that. Don't get me wrong. I like buying the shiny little precious metal called silver, but if you're trading or you're position trading, or if you're investing in the paper assets market right now, gold is the commodity to watch. Keep an eye on that. Copper, though, and also, you know, with the gold and copper both breaking out today on strong breakouts, take a look at FCX, Mark, Freeport McMoran. They're one of the number one producers of gold and copper in the world. Let's go ahead and look at the chart here.
Wow, that's a nice break. Right through what, 1250 through 13.
Okay, look at that break off a reversal, breaking out on strong volume, good candle.
Wasn't Freeport on the commodities report this weekend as a trading candidate?
I believe it was.
I believe it was, but it's also a good stock for covered calls. It's very liquid. It's a cheaper stock as well. And so if you're looking from a trading perspective, SCX is a good candidate, no doubt about that. But if you're also looking for some cash flow type scenarios, FCX is also a really good covered call stock. It's been a tackle 25 stock in the past. We removed FCX from this year's tackle 25 simply because we put gold on there, the merger between Randgold and Dumont. So in terms of this, though, FCX, great cash flow type situation. So take a look at that as well.
I love the combination of FCX. And I'm glad you popped in, because you just made me, well, whether you make me money or not will remain to be seen.
Are you taking me to dinner?
But that combination, and once again, and that's it. If I lose money in buying several hundred shares of FCX, I ain't going to hold Matt against that. But what I see here is, once again, the fundamentals behind FCX on the commodities market, love the technical pattern after a prolonged move to the downside. Let's go back over 1 year.
And Adam, FYI, I'm going to claim 2 of those likes, since when I started talking, we were at 42 and now we're at 44. So I am claiming.
You don't get any of those likes.
No.
But
no,
you have a technical breakout. Bottoming pattern, stability for a couple months formed after a long-term downtrend, and then you have a technical breakout of resistance with fundamentals behind it. Like, I don't care if I make money. That's the type of situation I look for. And right now I have my cash flow, longer-term position trades in boot. This is not something I'm looking at from a short-term trading perspective, although you could certainly make an argument. But from a cash flow perspective, I have the stability of a bottoming formation. I have a technical breakout providing a strong technical signal. I have all of the fundamentals behind it. I mean, this is a great situation.
I mean, honestly, I get asked the question a lot, Mark. When do you get into a long-term, like when do you make a decision to buy a stock for the long term with the expectation that you're going to be doing covered calls on it, right? Well, this is the day. That is the signal. You got a breakout on copper, a breakout on gold, a breakout on FCX, which is a gold and copper company, which is a very liquid covered call stock. So for me, FCX is in one of those situations right now that is just really technically sound, but I also believe it's fundamentally sound with the backing of the breakouts on gold and copper right now. And then you just wait for slowing momentum to write the call. So I wouldn't write the call today. I would wait for it to start doing its trend analysis, get up into resistance, then I would write the call. But yeah.
I mean, let's say we're right on the long-term fundamentals here. One thing I do is, looking at these long time frames. Do you think there's a little bit of profit potential to the upside?
Oh, just a little.
Tiny bit.
I mean, commodity stocks are tricky. Make no mistake. They don't exactly behave like, a tech stock or a consumer staple stock. But when you look at potential, if there is a long-term shift towards commodities, if commodity prices go higher, there's certainly some room to the upside. Now, one of the worries I have in commodities as a whole is, you have a little bit of slowing economic growth. I don't know if there's that type of short-term upside to the potential, but for me, there sure as hell is a lot of stability in the market. And from a technical perspective, my goodness, you got a lot of room to the upside.
Yeah, you do. I mean, I don't expect something like 2009, 2010 to happen again. I mean, if you guys remember that was when we announced quantitative easing, did all the bailouts, increased money supply, and silver, copper, gold were just absolutely skyrocketing. And, Mark, you asked me a question today before you got onto the halftime report. You said, Matt, what could stop this, right? What could stop gold? What could stop these commodities with these precious metals like palladium, platinum as well? And the one thing I said to you, Mark, I said with the central banks doing what they're doing from a currency perspective and monetary supply perspective, with the U.S. government going into $22 trillion of debt every single year, not every year, but it feels like that, $1 trillion of debt every single year.
Seems like it's doubling.
It does feel that way. Compounding interest 101, by the way. But the only thing that could stop that was margin increases at the Chicago Mercantile Exchange, the same way they did it in 2011, in August of 2011, when they raised margin requirements on copper, silver, and gold ownership. And that forced all the speculators, short-term traders, and individual investors like you and I to basically capitulate to the margin requirement and get out of gold. That's how they kind of manipulate the price to a certain extent. But outside of that, see, he's ranting, but he's on mute.
No, if that ever happened, how many times would we talk about that between our collective shows?
Oh, it would be all over.
Yeah, I mean, so if we'll cover it for you if that ever happens.
Well, I know, but I'm just saying that is one scenario that could happen. But it's they did it in '82, and they do it over time, right? That's how they stopped the massive bull market.
Yeah, but how much money would you make before then? Like if it ever got to the situation where that were
got to that point,
that means you made a lot of money on bullish plays.
Silver went from $8 to $48 before they did that.
Yeah, I mean, there's a lot of room before that happens.
There's a lot of room. So I was kind of joking when I said it to you, but I mean, no, I mean, what I was saying is fundamentally, technically, you're not going to get a better picture than gold right now. You're just not.
We didn't even get a chance in today's show to talk about economic data or any of that.
Chucky, I just popped in, just talk dollar and gold real quick. I got to hop into another meeting. Before you guys finish, make sure you check out the podcast this week. Good podcast. Make sure you go download that. And we'll see you in shows later this week.
Yeah. And so
I like his shameless plug as he's heading out.
Now, listen.
I'm a narcissist.
That is just good business. That has nothing to do with a narcissist.
Even on the show he wasn't supposed to be on, he still had to pop in. That's like when he says, it's like when he's like, hey guys, I'm going to sit back and let you guys run the podcast. I'm just not going to say anything. And everyone at Tackle just laughs. We're like, no, the only way that happens if we mute and take away his ability to unmute himself.
There's some things in the economic data, and we're going to talk about this tonight at the start of the Coach's Show before we get into the psychological elements of trading. There's some problems with the data that could cause problems for equities. And I have a working theory that I developed over the weekend. I'm going to share all of that on the Coach's Show tonight, 8:30 Eastern. If you are not a pro member, send me an email at team@tackle-trading. I'll get you hooked up with a free trial. But it's going to be a great Coach's Show. We're going to talk about something that kind of is looming large in the market that could provide a halt to this rally. And it is a working theory that I have. I'm really convinced by it. Trading conditions have been easy. I've been pounding the bull pulpit all year long. Pound, 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 pound in every show. there's something I'm worried about. And we're going to share that on the coach's show. Then we're going to talk about the psychological elements of trading, and we should probably spend more time on that. The psychological elements of trading are what prevent a lot of people from succeeding in trading. So we're going to talk about that and then do rapid fire tonight at the coach's show. If you are not a pro member, send me a message at Team of Tackle Trading. I'll get you hooked up for a free trial. That's Team of Tackle Trading. For pro members, absolutely check out the coach's show live tonight or on recording. Any final thoughts?
Final thoughts is anybody watching this after the fact, please give us some comments. Actually, even people watching right now, let us know down in the comments how Mark and I did, you know, rather than those other two Justice brothers. I mean,
I don't care about that. I want to hear your comments on gold and commodities.
Oh yeah, actually, I want to hear that too.
Where are you at? What do you see? Like in your
Are
own
you buying? Are you feeling scared? What's your thought?
I want to hear what you've been doing in 2019, where you're at right now, what you might be looking to enter, what your opinions are, because this is like in our ability to predict, which is always a hard science in this game we call trading and investing. I mean, it's where we feel the most confident, but what about you? What have you been doing? What do you see? I mean, ongoing conversation about gold and commodities as a whole.
Let's hear it, guys, down in the comment section. Like, share, subscribe, and we will see you guys tomorrow. Thanks.
All right. Take care, everyone.